Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how markets are digesting the progress of reopening the economy. And Phil, while the Nasdaq-100 is back to all-time highs, how are the other indexes faring with the recovery rally?
Yeah, I think that's a good question because everyone's talking about how strong the market is. Obviously, people are talking about valuations, but really there's a dispersion across the spectrum of large cap, small cap value growth. It's not like all companies are performing the same way as a lot of these tech companies and new economy companies are performing. So the Nasdaq's pretty close to all-time highs, well above its start of the year levels, as we've talked about before. But the S&P is only just back to sort of break even with the year. And if you look at the small cap index, it's still down, somewhere between 5 and 10%. So the small cap companies, obviously, a lot of them are more affected by what's happening in the US because they're more local companies, are still struggling to feel this rally the same way that a lot of the companies in the Nasdaq have felt it. And if you look across the world, we see the same sort of thing happening. So the US market, despite all the news that we've been talking about with coronavirus and the fact that the US has been relatively slow to tackle coronavirus, the stock market here has bounced back much more quickly than a lot of the global markets have. And Europe, even though it's back to work much more normally than us, is still falling behind on the equity market side, although we have seen some interest the last week or two in European ETFs.
I think it's interesting that earnings revisions have turned positive. The season is playing out a little bit differently than I thought it might have.
Yeah, and remember we talked about how few companies were giving guidance or how many companies weren't giving guidance. So there was a lot of uncertainty heading into this quarter's earnings season. But what we're seeing at the moment is actually a slight improvement in earnings revisions, so net positives. The real data seems to be hitting the tape, and in general, more companies are surprising to the upside than the downside. So that's good news for the companies. It's good news for the economy because more companies are actually doing better than analysts had forecast. It sort of also, I guess, talks a little bit about the forward earnings and the valuations too, because the next year forward earnings make the indexes look a lot less expensive than current earnings, which are obviously down 40+% in a lot of companies.
What do you make of the China tensions? It sounds like there's a lot bubbling up under the surface there.
Yeah, China has been sort of behind the scenes in the news, but obviously overnight there was a closure of the Houston consulate. There's still the Hong Kong politics playing out. There's the China Sea politics playing out, and of course the trade war. Each of those things, I think 6 or 8 months ago, might have been enough to push the market down on its own. But right now, they're sort of risk factors that are bubbling in the background. Coronavirus and vaccines and Fed stimulus seem to be the main focus of the markets right now.
And that can also be why we're seeing the performance in gold and silver.
Yeah, it's really interesting. We've seen, again, looking at the ETFs, we've seen the silver ETF relatively active the last few weeks. And I guess this chart kind of shows why. Gold is pretty close to multi-year highs, and silver has had a pretty strong rally as well just in the last couple of months. So precious metals, not really industrial metals, probably can't draw too many conclusions about production increases from these two charts. But precious metals are also often used as an inflation hedge or just a very risk-off place to park assets, both of which sound pretty dramatically bad for the economy, but also opposite. So you're looking at coronavirus and the chance that we have a vaccine. It doesn't seem like we need to be totally risk-off right now. The volatility in the market's been falling. The prices of the market are rising. So it doesn't look like a risk-off trade so much. Maybe it's an inflation trade. Obviously, precious metals will go up if the prices of goods and services go up. So potentially people are looking at precious metals for that. But then if you look at interest rates and you look at the tips and you look at actual inflation numbers and you look at just the level of unemployed people, a lot of economists don't think we're going to see strong inflation for at least a year or two, despite the amount of extra money in supply and all of the stimulus money that's sloshing around in the system. So it's obviously something to watch. The US dollar has been falling and weakening because of the low rates, because of the negative outlook on the US versus the rest of the world. But something like precious metals being bought clearly shows some people are a bit nervous about the future.
All right, Phil, great stuff as always. Thanks so much for joining me on Trade Talks.
You're welcome, Jill.
All right, and thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.